Hey, Year 11. So today, after having looked at the different sorts of transactions that our businesses do and looking at how we can better identify these transactions, what I wanted to do is I wanted to look at the actual process of recording these transactions because, as you know, the accounting process starts with our source documents and then moves into recording those transactions. So I want to look at that today. So in doing so, we're going to be looking at our cash receipts and cash payments journal, and we'll have a brief look at two different sorts, a simple one and a multi-column one. I think you'll see why we use the multi-column one much more often soon enough. So let's go to the slideshow. So as I said, today we're looking at recording and reporting our cash flows. So using cash is pretty much the most common thing that small businesses will do, whether it's taking receipts of cash where people are buying things. If you think about the amount of times that people will come through, and it doesn't just have to be cash, it can also be tapping an EFT or a debit card kind of thing. All those situations, they're all cash and they all need to be recorded. Quite similarly, cash payments are the most common thing that we'll be doing in terms of paying in our business. So we need a way to record them effectively. And this is where we use a single entry system. So there's two special journals that we use in this case. It is our cash receipts journal and our cash payments journal. So as you guys know, we might have a ton of different types of cash receipts. But it could be cash from selling goods, it could be interest that we've received, it could be selling old assets, it could be collecting money from people that owe us, it could be cash for providing services or taking out a loan or having capital contributed by the owner. All these different things all have to be recorded in our cash payments journal, so there's a lot to record at times. As for cash payments, we have a wide variety of these. So it could be buying goods, it could be paying interest on loans, it could be buying new assets for the business, it could be paying people that we owe, paying expenses, repaying our loans, it could be cash withdrawals, it could be all these sorts of things. So we need a robust system that works for both cash receipts and cash payments. Now, in terms of which columns that you choose in a multi-column system, it's up to you. You need to design a system that is going to be effective for the business at hand. So let's look at that now. So, as I said, it needs to be designed to meet the needs of the business. But you should always start with your standard columns, which is the date of the transaction, the details that the item needs to have. So it could be we're paying wages, or it could be sales, or loan, or advertising, things like that. And also an EFT or check number or anything like that. Something where if we go onto our banking system, we can identify it. So along with these standard columns, we also need to think about the other columns that will be needed to suit the business. So we'll have a look at the textbook soon, and we'll have a look at a few different examples of systems that can be designed. But you've got to understand that a landscape business, for example, when they're making cash payments, could have anything from soil, plants, pavers, things that they're using every day, through to wages, advertising, and drawings. It just depends. So one thing that we should also note is that we'll always have a sundries column, and we will also have a GST column as well. So sundries column will take anything that doesn't fit into the system that we've designed. Hi, sorry to cut in. David from the future, and I'm going to do this a couple of times at the moment. So I said that I would show you the difference between a multi-column and a simple one in terms of our cash receipts and cash payments journal, and I'm also going to show you a statement of receipts and payments. So what you can see on the screen is what we call a basic or a simple cash receipts journal. You can see that it's got our key columns, but then it just records everything that we do in just 3 columns. Now this is fine. It gets us to our final amounts, but what it doesn't show is where we're receiving money from, very simply. Whereas if we look at a multi-column one, like this one, I can instantly go to my totals and see where I'm earning different amounts of money. The only column I really need to dig into is the sundries column, and that column is already pretty sparse, so it's quite easy to tell. So it breaks it down and it gives a lot more information, as you can see. This is an example of a basic cash payments journal, and as you can see, pretty much the same as the cash receipts journal. It gives us all our information, but it's awfully cluttered and it's hard to tell what is happening. Whereas if we look at our multi-column example, I can tell you where I'm spending my money. I can tell you what is the biggest cost to my business. Again, my sundries column is very sparse. It's very easy for me to say, I'm paying $480 in insurance, and I'm paying $250 in advertising. It's very quick and easy for me to tell that. Otherwise, timber, wages, drawings, it's all already added up for me in the totals column. So there's definitely some benefits there. Now, it's important to keep in mind that timeliness when we're preparing any accounting report. I've said it a million times. There's no point in gathering information if it's going to be coming in 2 or 3 months late. So we need to make sure our system gives us timely information that we can use and action very quickly. So as a result, having these cash journals, it allows us to create data that is more useful and more relevant for users much faster. And this is where the statement of cash flows comes in. So when we report our statement of cash flows, we need to include every single item that has its own column. And along with that, we also need to report every individual item within the sundries. So we're hoping that our cash receipts will always exceed our cash payments, but it shows the totals, including the itemized amounts, but it then shows the totals and shows something similar like this. So excess of receipts over payments, so our balance, the bank balance that we had at the start, and therefore our bank balance at the end. So that's providing a few different pieces of information. It's providing the amount of cash that we received in excess. It's telling us what we began the period with and what we're finishing the period with. So in doing so, it's providing us 3 different pieces of information. Now, statement of receipts and payments. Looking at this, you can see that we've been able to break down where our sales are coming from and where all our different amounts of cash are coming from. You can see that the only things we've actually had to pull out in terms of detail from our journal is the sundries column, of which there are only a couple of things in there. So it gives us our total cash receipts and where it's all coming from. It gives us a breakdown of our total cash payments and where that's coming from. And it gives us our excess amount, our bank at start and bank at end. It's important to keep in mind that when you're looking at the heading, it also shows the time period, whether it's a month, a year, 6 months, depending. Now, in terms of GST, we treat GST like it's a liability, but that might not always be the case. We need to remember that we're always going to be collecting GST to pay to the ATO on every single receipt that we take in, apart from things like interest. But when we're looking at GST, let's take in an example. So say the cash receipts journal says that we've received $2,000 of GST, but we've paid $1,200 of GST. That means that we've paid out to other tax agents $1,200 of our liability. So the amount that's left is the amount that we still need to pay to the ATO, which is $800. So that's shown as a current liability. As I said, as an alternative thing, we may, in some situations, end up paying more GST than we've actually collected. In this case, because you've got to remember the GST is not a tax on businesses, it's a tax on end users. We are a business, we're not considered an end user. Therefore, any GST that we have paid in excess of the amount that we already owe to the ATO, they give back to us. So we should be getting a $1,200 refund. So, in wrapping up, I'm going to put up a list of questions for you guys to do in the Check Your Understanding section. And I'll put up a list of questions that need to be done in terms of chapter exercises at the end. But before you touch on any of that, you really should be making a set of notes based on this slideshow. And make sure that you have that all set up and you should be good to go.